Can I ask Brent a question? Is when you do your analysis like on a daily basis, and I know for myself, I'm always doing if then if this then that. So if this happens, I'm going to react by doing this, and I'm gonna do this. This is going to be my action if this happens, or if this currency pair reaches this level, I'm going to look to trade this asset in a certain direction. Do you do a lot of that type of analysis? Because that's what I find myself doing all the time, all day long.
I do that a lot with events, definitely. Like, all this stuff that we're talking about, I think a lot of it comes down to just doing the work, right? Like coming into trade and just sitting down and pressing buttons is never going to work, because even if it works that day, you don't know why it worked because there was no process involved. So a lot of this just comes down to preparation and doing the work. And so like on my side, that also means like reading central bank speeches and like boring stuff like that. But yeah, I think like, I guess in some ways what you're talking about, Blake, is like reassessment triggers or catalyst triggers. I don't trade as much with charts as a lot of people, but I use them a lot, but primarily for risk management, not for trade selection. So I will quite often, like I'll have some kind of thesis around like the way the narratives are changing in the world or whatever. And that makes me want to be short dollar yen. And then I'll drill down on the tactics. And then like you're suggesting, I'll say like, this is a pretty crappy level to get into dollar yen. But if it rallies to, and I'm just saying this, this isn't my actual view, but I'm just saying this could be a view. But if it goes to 115.20, that seems like then I can lever up. And that's where I want to get in, because like there's always this tension between having a really wide stop and then obviously you're less likely to get stopped out, or having like a razor thin stop and you can have the biggest position, because the further your stop is away, obviously the smaller your position has to be for the same amount of dollars at risk. So for someone like me, who I always like want more risk, I'm always trying to thread the needle and like have the perfect entry point so that I can have maximum leverage. But I also know, it's better to go a little bit away from that. Like you find what you think is your point of maximum leverage, and then just be like a little bit safer and, move your stop another 15 pips further than you wanted it to be, just to
Can I ask both of you guys, hold on, I want to hold on this point because it's really important, but I ask both of you guys two different questions. To you, Blake, you have a level, right? Let's say you're long something, you have a level, and you say, if it breaks this on the stop, that's when I want to be out. Do you ever say to yourself, oh, this is the exact opposite of my original thesis, it's actually breaking the stop, I want to go the other way? Do you ever change your view midday and just literally join the other side on the trade?
If there, you know what, that's a good question, and I would say more times than not, I don't. And unless there's a reason for it, like there has to be a catalyst. Like if you could use Russia, Ukraine right now, perfect catalyst. Well, there's a de-escalation, and then all the ideas that you had and that you were applying towards, an escalation in Russia, Ukraine, everything has to flip, and then you say, well, if the dollar yen breaks 114.50, I'm just using that as a number, then I have to be on the short side because the yen's going to strengthen because things have escalated. But flip side of that is, things have changed, and Brent, you would know better than anybody that you're always watching the wires, especially during times like these where headlines do matter, and a lot of times headlines don't matter as much. But right now in this market today, it does matter.
Yeah, exactly. Now to you, Brent, I actually have a question. You said you thread the needle. You want to have as tightest stop as possible so you can have maximum risk. But this again is a question of will you come back? So let's say you long dollar yen, 10-point stop, you get stopped out, right? You wait half an hour, trade still looks good to you. Will you go back in? Will you try more than once on your trade?
So that's a great question. So just to be 100% clear, I'm saying like it's a spectrum, right? Like I'm not saying that you always want to go short with a 3-pip stop. What I'm just saying is you want the tightest stop possible within the realm of understanding what the noise to signal ratio is in the market and what volatility is and all that. But to answer your question, I actually do that quite often. And the reason is that generally, like, I'm more of like a buy low, sell high guy in general. Like, what my edge is a lot of times is finding the points where the narrative's changing, but the position tends to lag. So, like the story, the economic story can be changing pretty dramatically before the markets actually start to turn, because people are sticky with, like, people have confirmation bias, and views are sticky. So, like, let's just say, so if you, in that case, like, let's just say I was bullish stocks, which I'm not, but whatever. So then, and I say, like, okay, I feel like, we've kind of priced it. I'm just throwing out a hypothetical here. We kind of priced in a lot of Fed hiking, Russia, people are waiting for Russia to attack any day. So there's mostly an upside kicker from that. Then I might, like, then start drilling down on the charts, and then I find, like, okay, I can go long here in SPOOs with a 40 handle stop. That looks pretty good. Like, that's about what kind of leverage I want. And then I get stopped out, and then 2 days later, that I might feel similar about it, and then I'll take another shot. So, like, sometimes what I'll do is, like, I'll take two shots where I'm risking 20 to make 80 or something like that. And I end up, getting it on the second shot. I don't mind doing that. However, I will say the times that I've traded the worst in my life are when I'm really committed to a view. Like, I'm a big believer, and I've learned this the hard way, in, like, strong views weakly held. So one thing that I used to do as a trader at a bank, you go to see a lot of clients. So we used to go to all the hedge funds, and usually you're not meeting like the CIO or the founder. You're meeting, like, the senior PMs or the execution people. And so I would always ask them, like, so who, the guy who's the famous guy who is like the god of trading or whatever. I'd always ask the PM or the execution guy, why is that guy successful, do you think? Or, like, what's like unique about him? And I'm saying him because all these founders are men. So, and the answer almost every single time was, in the morning meeting, we have everyone talks, and he gives his big bullish case and all that. And then at the end of the day, I look and he's short 5,000 futures. So I think the ability to be flexible. Now, obviously, that can be like a disaster, right? That can just mean, like, you're friggin' selling every time it breaks down. Like, I think there, like Blake said, you have to have reasons. And my process always involves, like, okay, what are the bullets? Here are my 5 reasons. And so if I can do that with a straight face and be honest to myself and say, this trade makes sense, I'm going to take another shot.
Yeah. Blake, do you do that as well? Do you have, like, bullet points for your ideas, even if they're mental, then it's not necessarily written?
Yeah, well, that's a great question, and the process that we go through, like, with our clients every day, is we actually go through every major instrument that we cover, and we go through what are the key levels and why would we get there, and if we get there, is it a place that you really want to reverse? Because the average trader tendency is to fade strength or fade weakness, and so the question I always have to ask everybody every single day is, if the euro got up to like, let's say the euro got up to 114, which is resistance today, we get up there and nothing's changed. Do you really want to be buying there? Or if it breaks out above it, is there a reason why we are buying euro now above 114 when it was just trading at 113.50, earlier in the day? So we talk through those situations, and listening to Brent, it actually makes sense where I should actually be writing it down versus typing it down. It probably makes a big difference up here, right?
I think so, yeah.
Yeah.
Interesting.
One thing, I'm going to just throw in one more. I had said earlier that, like, I tend to be like a buy low, sell high guy. But I think one thing actually that's important is to not really be the same thing all the time. Like, breakout traders do great when volatility is high, and mean reversion traders tend to benefit when vol's not as high. But what you should really be doing is not be a certain type of trader that only does one thing. You should do the thing that works in the market in the regime that you're in, So I mean, like, when the shit's hitting the fan, oops, I don't know if I can say that, but when the guano's hitting the fan, then I'm a breakout trader, and when the narrative's turning, then I'm buy low, sell high guy. So I just wanted to mention that because I think it's important. And
Yeah,
actually, that's part of like the adaptation thing is not just adapting your own trading style and getting better as a trader, but also adapting to the volatility regime or the type of market that it is.
You know, Brent, it's you and I have talked obviously on a personal basis many times, and I consider you a friend because we've worked together at different interviews and whatnot. But it's interesting because we followed very similar paths early on, and we were both products of the Nasdaq bubble. Just kidding. But we were both products of that. And one of the things that you go through when you go through this 20, 25, 30-year process of trading the markets is, and one of the things that I'm always trying to sharpen, and people go, well, you've been doing this for over 20 years, so why haven't you figured this part of it out? It's like I always thrive to be better as far as being more flexible, because as a trader you tend to get set in your ways and it usually comes down to profitability, right? And right. So your P&L is working a certain way, you're trading a certain way, and then it's when the market shifts, it's sometimes that adaptation period from shifting gears. I'm not as good as a lot of people are, and I've always strived to be better at that. So
I think it's partly too the rat hitting the button to get the cocaine or whatever. That that whole like stimulus response thing is like, if you made a lot of money short Aussie yen in 2008, you're always kind of wishing that Aussie yen would trade like that again, but it's not going to. Like, that's not happening.
Sure.
So like,
you mean Aussie yen is not going to go down 18 handles in a day like it did in 2008?
Those were good days, by the way.
People that like whatever your glory days were of trading, people tend to want like have a subconscious preference for that style. And what you really want to do is like once every month or so go, okay, like what style is rewarding or is getting paid right now, and like what makes sense, and not just be like jack of one trade.